Hello friends, welcome to this video on NISM series 19B, which is about distributor of alternative investment fund category 3. On the basis of request received from some of the viewers, I have decided to create a series of videos which will have multiple choice questions related to this particular certification program. So I would request you to keep on watching this channel, subscribing to the channel, and also asking your friends and colleagues who are interested in NISM and IIBF certification to subscribe to this particular channel. In this particular video, I will take you through 10 questions related to overview of alternative investments. This relates to the chapter 1 of the series 19B, which is about the distributors of AIF category 3. So let me start with some of the useful questions for you. The first question is, the Department for Promotion of Industry and Internal Trade, which is called as DPIIT, defines a startup as a business that is not more than how many years old and has not recorded a turnover of more than a particular threshold. So which one do you think should fit into this category? Well, the threshold set by DPIIT is 10 years and 100 crores, which means to qualify as a startup, your business should not be more than 10 years old and it should not have recorded a turnover of over 100 crore INR. This is there in the chapter 1 in context of alternative investment fund. So that was our question number 1. Let us move to question number 2. Alternative investment fund which employs diverse or complex trading strategies and invests and trades in securities having diverse risk or complex products including listed and unlisted derivatives are defined or described as what? I mean, defined by SEBI and described by others. That's how I will like to put it as. So they are defined not as the private equity, not as the debt fund, also not as the venture capital. Well, these funds are called as hedge funds. So the answer for this is B. Now this is a very SEBI specific definition. So you need to know this definition so that you could answer questions related to this in the exam also. We quickly move on to question 3. SEBI Alternative Investment Fund Regulation 2012 define AIF as what kind of a structure? So are they corporate? Are they financial? Are they NBFC? Well, to be very clear, they are a privately pooled structure. They are neither financial nor NBFC nor corporate. They are a privately pooled structure which raise money from whom? From selected investors, and their structure is not open for everyone. So we'll put it under the category privately pooled, right? So the answer will be D. Now we move on to the next question, question 4. The essential characteristics of alternative investment is, I mean, we can define alternative investments in many ways. They are not traditional investments. Okay, they invest in XYZ securities. But the essential characteristics of alternative investment, is what we define as illiquidity, right? So alternative investment funds, one characteristics that they always reflect is the illiquidity, right? So they are not liquid, they are not listed on the stock exchange, they are not easily tradable. Okay, so tradability, conversion, fungibility, all that does not fit into the essential characteristics of alternative investment. All these questions, as I said, are from chapter 1. The next question is, which of the following categories are excluded from the definition of alternative investment? So alternative investment definition has also an exclusion parameter. I have listed 3 parameters. Let us see which are excluded. So any fund which is a mutual fund or collective investment scheme as per SEBI regulations, well, such funds are never considered as alternative investment. Family trust, ESOPs, or other such employee benefit trust, holding companies, special purpose vehicle set up for securitization or any other purpose, they are also not considered as alternative investments, so they will also be excluded. And funds set up under RBI regulations such as securitization company or under the purview of any other regulator. So basically in this question, all three are excluded from the purview of what we can say as alternative investment. So all A, B and 3 would be our answer. This takes us to question 6, okay, which is alternative investments usually look for opportunities in hard commodities. Well, hard commodities are where alternative investments typically show interest. Soft commodities would be what we call as agricultural products. So the answer here is true again. We move on to the next question. The next question is about the seventh one, which is dash dash dash. Investing is about direct investment in infant companies with businesses that are yet to grow or evolve completely. So which kind of investing is this and who invests here? Well, the answer for this is the A, which is venture capital. So venture capital investing is about direct investments in infant companies with businesses that are yet to grow or evolve completely. So hedge funds, private equity, public equity do not feature under this category. We move on to quiz 8. Securities issued by entities managing large infrastructure assets with long-term contracts that ensure steady and periodic returns with predictable and lower level of risk taking on their cash flow are neither known as REITs nor known as SPVs nor known as securitization. They are known as InvIT units. So this is also there in the chapter 1. Please read the chapter 1 in detail. We move on to question number 9, which is the second last question of this video. On which of the below mentioned parameters do private equity funds score poorly? So they give high absolute return. They also help in diversification, but they are not typically part of reliable income stream. Why? Because private equity funds do not provide periodic incomes. They rather invest in some of the unlisted companies and later on they exit from unlisted companies. So there is no reliable income stream here or reliable income flow here. Question number 10. Which of the following is an alternative investment? Well, this is the easiest to identify because all three investments are traditional investments. So purchase of vintage wine is what we will put as alternative investment. This takes us through all the 10 questions. I hope you enjoyed solving these questions with me. I will be back in next video with around 20 more questions. So please do keep watching this channel. Thank you, and once again, do not forget to subscribe to this channel and like this particular video.